Afternoon, everyone. Bob Iacchino along with Mike Arnold for an afternoon path chat on April 18th, covering the futures markets. Interesting day today, very interesting day. You saw some big metals moves, some significant ones as well. The VIX pulled back, but mid-morning equities pulled back as well and didn't really recover at all into the end of the day, as we've seen when there's been sell-offs lately. Geopolitical tensions did not really ramp up. We did have some semi-disappointing U.S. economic data. Housing starts month over month down 6.8% versus an expectation of down 3%. That is versus a 5% increase last month. And building permits, while up 3.6%, that's higher than expected. Permits are just permits. They don't mean homes are being built. We also had U.S. dollar manufacturing production down 0.4%. The market is definitely starting to look vulnerable. And what Mike's going to cover today is not only some decent-sized moves in the futures markets, but markets that may be leading and may be significant. You may be seeing kind of canary in the coal mine stuff for the overall equity market. So let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it is all yours.
Okay, thank you, Bob. Here we have the VIX chart. We've pulled back, nearly closed on our second significant level, holding above the 8 rotation zone. Not ready to say everything's all clear yet. I still want it to drop back below this significant level, especially on a closing basis. And then I'd like to see the markets take out the highs from Monday of this week. That was Monday, April 17th. And then we probably have indication that at least a short-term bottom is put in. Don't know how long that bottom will last, but it would be an indication of short-term bottom. There's not really a ton happened in the financials, so we're just going to jump over to crude. Crude came down, tested our key significant level once again, and the rising 8 and bounced back up. This is a very definitive line in the sand. If we get a sustained move or a closing move below 52.51, we can then watch for the drop to 52.07. Then we have this prior target area and a rising 21 coming in at about 51.67. So those are the key targets to downside. This level holds and we rally up. We also tested for the high today, our significant level at 53.32 area. If we do get above there, we're still watching this declining trend line 53.50, and then above that the 53.76 level. And once we get through that, especially on a closing basis, which would be above a defining point, we don't really have a clear path, but we do have a key significant level right around the 54.23 higher. So that's what we'll be watching for with crude. Let's get over to copper, which we haven't touched on in a couple days really. Redrawn trend line, new defining point. We did get a close below it today. So we would expect this to have a 2 target area to watch for based off a single candle clear path. First one is 250.79. Second full target is 248.72. Before that, we have a Gann cluster coming in, which could provide minor support about 249.75 to 249.59. So those are the targets for the downside. You'll see we also have a horizontal channel, which is a copy of this line duplicated down here. That's virtually coming in at the same point. Did that to make sure our targets weren't too far extended, because a lot of people will be watching this as a downward sloping channel. So that's going to be key. If it does rally back up, watch for resistance right around the 253.49, which is just slightly above the close today. Then we have the area of 254.76. And then there isn't really much until we get to the 257.71 to 257.87 area. So those are the key levels you'll be watching for in copper. Over to gold. Gold moved a little lower today, held support on this trend line, which is now going to be a redraw based off the closing. I just didn't want to redraw it until we showed how it was still prior support and not a redraw yet. We also tested our significant level, that 1294 area we've talked about repeatedly with gold. So on a continued move higher, first resistance 1294, Second key resistance, 1297. And then if it gets above there, especially on a closing basis, watch for this full gap fill, which would take it to roughly 1303. And then the full target would be 1305 to the upside. If we head lower, first line of support is about the 1280 to 1278 to 1280 level is really where you'll be watching for. And if that's broken, not much until 1271. And then key significant level at 1265. Finally, let's take a quick look at silver. Silver closed lower as opposed to gold, which closed higher, but it rallied back substantially, tested the bottom end of the R zone and the flattening 200, broke below that down to about the 1806, closing right on a key GAN level, 12.5% GAN level, 1829. If it does head back down, minor support 1820, major support's going to come in right around that 1806 to 1800 level, and then below that we have about 1791. On a rally tomorrow, watch for 1842. If it gets above there, there's not much. There's some minor resistance about 1846, and then it would be looking up to around the 1850 to 1857 area. That's all we have for you. Back to you, Bob.
Thank you, Michael. Definitely keep an eye on those downside targets in copper that Mike gave you. Copper has been an iron ore story, and even though the dollar weakness, which normally should push up copper, is continuing on a much flatter trend, that trend is still down. So that could prop up copper, so you might see some volatility in that, but watch those downside levels. Cheers, everyone. Thanks for watching. We will see you in the next Path Chat.